Now, let's talk tax court cases and see what taxpayer tried to do in the past when it comes to paying their kids and see what the IRS thought of it, the reasoning behind it, and what the tax court said about it. So the first case is Fisher versus Commissioner in 2016. And John and Lisa Fisher, they're both attorneys in New York. Lisa was actually a sole proprietorship as an attorney, and John was a partner at a law firm. And they have 3 young kids, all under the age of 9. And what Lisa did for her sole practitioner law firm that she had herself, during the summer breaks, spring breaks, and winter break, instead of sending the kids to like daycare and summer camps, she actually brought her kid to the office. And Lisa, being the lawyer, she knew the law. She said, hey, I could just hire my kids, have them do office work, and I'll get a business deduction for it. That's a great idea, Lisa. Let's see how you're doing this. So what did she have her kids do? She documented that she had the kids do paper shredding, mailing documents, answering phones, greeting clients, and cleaning the office. Okay, that seems like legitimate office work. Now, how much did you pay them? So she paid them for 2006, 2007, and 2008. And the amount I'm going to give you is actually adjusted for inflation up to 2025, just to make the numbers more relatable. So remember, these are adjusted for inflation. So in 2006, the amount that she paid adjusted for inflation would be valued at $10,435. In 2007 was $10,313. And in 2008, it was $8,022. And these are totals that she paid for all her kids each year. Oh, okay, I think everything looks good. I mean, there's legitimate office work. The amount they paid for 3 kids, like around $10,000 total, so a little bit over $3,000 each. Okay, that could be somewhat reasonable. So let's see what happens next. So a couple years later, bam, the IRS decides to audit them. And in the audit, the IRS is looking for a few things. They're looking for W-2, payroll, time logs. Lisa, the lawyer, didn't have any W-2s, didn't have any payrolls, and barely had a good, clear log of what the kids actually did. So what did Lisa provide to the IRS during this audit? The only thing she was able to provide were informal payments, where she could say that she paid cash to the kids and that she funded the kids' 529 plans. Ooh. Okay, now the IRS is looking at this and saying, hey, this is looking more like parental support. These are not legitimate business expenses or wages. And what it really looks like is that you're just giving them an allowance and you're just funding their 529 plans like any other parent would. It doesn't look like a real business expense. But also what the IRS did is that they threw math at this lawyer. When the IRS calculated the amount paid and the time tracked, the hourly rate, well, adjusting for inflation using today's dollars, was equivalent to $90 an hour. And putting this into perspective, at $90 an hour at today's rate, that's equivalent to $190,000 salary for shredding paper and mailing things out. And keep in mind, when this all happened in 2006 to 2008, the minimum wage was $6 an hour. So being the lawyer that Lisa is, she's like, hey, I'm gonna fight this in tax court. I'll see you in court. So now we're in tax court and the judge for tax court needs to determine, hey, are these payments really legitimate business expenses under IRC 162? And this is what the court said. The court said that we believe that the kids did do office work and that the kids do deserve to be paid for that work done. So that's good because it showed that the office work being done was the legitimate business expense and that the court agreed with Lisa, the lawyer, that, okay, hey, we know that the kid did do real office work and that they should be paid for that work done. But, and it's a big but, that there are no records, no formal payroll, no clear proof of hours. And because of this, the court agrees with the IRS that the amount paid to the kids were excessive and most of it was parental support. So that really kind of just dampens what Lisa, the lawyer, thought of what's legitimate to paying her kids. But remember, the court did say that the kid did work there and that they agreed that the kid should be paid. So how much should the kid be paid? You know, it's not going to be $90 per hour. So what the courts used was called the Cohen rule, And the Cohen rules allows the court or taxpayers to use a rough estimate of what's a legitimate expense for that job being done. And the court determined that each child gets $250 per year being paid. So that's the amount that she got to deduct per year was $250 per child. So what is that? $750 a year. Instead of the $10,000 that she paid each year, she could only deduct $750. So here's a takeaway from this court case is that, hey, you could hire your kids and you could deduct the wages, but we have to keep it professional, right? We have to make sure that the pay is reasonable, that there are time logs, W-2s, and payroll records. Don't blur the lines between what is family support and what are business expenses.